month here, getting ready for school to start. So before we jump into the numbers and all that kind of fun stuff, going over our quick tip today. Quick tip today, how much does property taxes affect your monthly payment? I see this a lot of times with first-time home buyers that are looking to buy a home. They jump on the internet, prior to meeting with an agent or even talking with a lender. They kind of do the backwards math using those housing mortgage calculators. And they go, oh, hey, this is where I'm comfortable in my payment. This is how much a down payment is. This is what my, the purchase price of the house would be. Well, one thing those calculators don't take into account is essentially your property taxes and your homeowner's insurance are not included in that value. So I think that's a huge, it's a great tool to have, but you have to understand the limitations of that tool in that side of it. And so I know with property taxes, that can affect it $1,000, $2,000, depending on how much, your property taxes are out there. It depends on if it's $10,000 a year, if it's $12,000 a year, that's an extra $1,000, obviously, just simple math there. And that's one thing too with those property taxes. Ultimately, typically those are going to increase every year. And so if you have a budget of what you want your house payment to be, and you feel comfortable with that, and you buy the house at the top end of that budget of your monthly payment, then maybe next year your payment may go up a couple $100 just from the property taxes and the valuation of your house. So that's one thing, again, in our coaching sessions, I know with Russ and myself, with our buyers that we're working with, we want to make sure that that those are potential expenses that are going to come down the road, which are going to come down the road. Inevitably, your taxes are going to go up. Your homeowner's insurance is going to go up. So that's why you got to take a big picture of your entire expenses of your monthly budget so that you are comfortable with that every year. I work with my clients on a regular basis, around this June timeframe when you're able to protest your tax valuations. Excuse me. And if we can get that value down using supportive data, as far as comparable sales on there. But sometimes, you may have not had an evaluation bump in a couple years, and all of a sudden you go from, 450,000 to 500,000, and you're like, oh my gosh, my value went up $50,000. Well, you haven't had an increase every single year. So maybe if you had a $10,000 bump every year, it wouldn't seem like such a big, gut punch, for all intents and purposes. And sometimes your county assessor aren't on the ball and getting, those valuations every single year and increasing them or, reevaluating. But I have had success myself personally, even with my clients, of protesting those valuations if the data is there to say, hey, here's what the market's doing. If I put the house on the market for what you think it's worth down at the courthouse, I'm not going to sell it, or give that data and say, here's what is sold in the last 6 months, and go back and analyze those. And maybe you have deferred maintenance that you have, the windows, the roof, driveways, settling, things like that the driveway needs to be replaced. Those are all things that we can document, show to the county assessor, excuse me, and then go from there on the protest side. So anyways, let's jump into what's going on in the real estate market here. There we go. This pops up here. So data wise, we ticked up a little bit on new listings. So we're seeing a little bit of re-engaging in the market. New listings came up just about I think it was 639. So, about 10, 15 new days. We've had some new homeowners. Congratulations to them. So yeah, the market's still, pretty active out there with regards to that. Months of inventory. So obviously our numbers there aren't changing too much. Our months of inventory is the same again at 2.7. So what does that mean to you from buying and selling standpoint? Ultimately buyer activity improved and went up a little bit. I think we're starting to see, people coming back from vacations. School is starting in a couple of weeks. So they're starting to get back in that, all right, let's get back in the school routine. Well, hey, maybe that's starting to look back at should we buy a house this fall? Going into the fall months here, but ultimately be ready for the right home. So obviously homes are popping on the market. And obviously there's slightly more options available out there for you from a buyer's perspective. From a seller side, obviously demand moved up a little bit higher. Positioning still matters. So positioning your house from a condition standpoint, positioning from, a pricing standpoint, so your house stands out above the rest rather than carrying that house into the fall, into the winter months. Typically, historically, when buyer activity slows down, in the colder months, but I think, with our climate, I feel like it's changed a little bit as far as, people, used to be like, oh, I never play golf in December. Well, now people are playing golf in December on a fairly regular year-to-year basis. So I think our market time or our buyer activity has pushed out a little farther than what it had historically done. When they're canceling, I know when I was a kid, they're canceling Halloween because of ice storms and things like that. So we haven't had too many of those in October, over the last couple of years. So I think our inventory and our market still stays pretty well. So obviously inventory held steady there. So that's kind of what we're seeing from the housing side. So let's jump in here with Russ. And I know the Feds, I know when we were on our meeting last week, they were just kind of announcing all their information. So I guess, well, how did that affect the market over the last week, Russ? And I guess, what are you seeing?
We continue to see quite a bit of chop. The Fed, as expected, didn't move short-term rates. They're holding tight, and most of the Fed policymakers are continuing to follow the line of thought that inflation is driven by the oil prices, which have been all over the board. This morning we were back down to $75 a barrel for oil. A little over a week ago, we were just under 100, and pre-escalation in Iran, we were just under 70. So we're not far off of where we were. Mortgage rates have improved a little bit from where they were, but they're not back down to the earlier levels. We'll continue to watch, of course, economic data. Obviously, inflation driven by oil prices is going to take the headlines, but economic data is also going to affect things, especially, hopefully, yet again, if we see some sort of a lasting peace situation in the Middle East. We did see the ADP employment report come out this morning. It came in a little bit weak, and that usually is a leading indicator of what the next jobs report will be. And the jobs reports are a major driver of what mortgage rates are doing. They don't always correlate, but they generally follow the same direction. So having said that, Friday of this week, we have the jobs report called the non-farm payroll report from the Bureau of Labor Statistics. And if we see weakness there and we see continued de-escalation in the Middle East, that would be good for mortgage rates, especially as we head, as you just mentioned, into the fall months, people going back to school, and that could pick up not only demand, but that could be very favorable for mortgage rates too. Are they going to drop down to where they were a couple of years ago? We don't expect that. But having said that, we really can't time the market for rates because nobody's got that crystal ball. But we can determine what you can get today, not only for a rate and also for home price. So we encourage you to get out there before demand picks back up.
Yep. Like I said, that's kind of all we got for today. If you have any questions, feel free to reach out to us. Any topics you want us to cover, let us know. Happy to do so. If you want to set up an individual coaching session with either one of us, we're happy to do. Our contact information is right down here at the bottom of our screen, and we look forward